In this market environment, we hold a fairly diversified position between value and growth stocks. To explain this diversified position, let me give my top 2 reasons to like growth stocks and then my top 2 reasons to like value stocks. In favor of growth stocks, Japanification and disruption. In favor of value stocks, valuation and transformation. So, for growth stocks, Japanification, being in a lower rate, lower growth environment for longer, is favorable. Those are companies that can do well even when we don't see a cyclical upswing in the economy. On disruption, in growth stocks we find a lot more disruptors, those that dominate the digitization of the economy, than disrupted companies, which are mainly in the value stocks asset class. In favor of value, well, valuations are clearly favorable for value stocks. On transformation, companies will adapt over time, and this will be the case for value stocks. Financial companies, banks, for example, will diversify their revenues to be less dependent on interest rates, so think wealth management or trading. Energy companies will continue to improve capital discipline as well as diversify towards renewables. So the idea of transformation over time could favor value stocks because they are cheap to begin with. So from a tactical asset allocation perspective, at the moment we're not taking a large position between value or growth stocks.